think there are still concerns which abound.
Yeah.
Locally, we know that although queues at banks, etc., have gone down, anecdotally, I mean, we speak with people around us and we kind of hear that banks are running out of cash very, very fast, especially the smaller denominations. I mean, locally speaking, the thing to focus on, the only thing you really can focus on is how fast we are able to remonetize. And there seem to be a lot of hiccups on that road. But I'm just going to use this minute to run us through some of the global factors, apart from some of the local factors, global factors which are lined up in the very near term. So what do we have right now in terms of the global setup? The dollar is weak, US rates are coming off, and US equities were off a little bit as well. There is an OPEC meeting tomorrow. I think there is, so this is going to be important after a long time, because the big question, apart from whether there will be output freeze, caps, etc., is whether OPEC will start to reassert itself as the primary controller and output setter for global oil markets or not. I mean, that's the big question as far as OPEC tomorrow is concerned. There is on Friday the US November employment report that it will be very keenly watched, because markets are firmly pricing in a Fed rate increase later the month after. Then on Sunday, we have the Italian referendum, and I'll put out some more details on that referendum in a bit from now. Again, views vary. Is this a very limited Italian event, or does this have implications beyond Italy in terms of their membership of Eurozone, etc.? And of course, I think broadly speaking, there is still expectation that global financial conditions are tightening. And I think the biggest kind of indicator of that is rates are rising in the US, and the dollar has been strengthening as well. Although over the last 36 hours, both have seen a bit of sort of dip. But people broadly in financial markets don't expect that to stay down for very long. They expect the trend there on both rates and the dollar to be up rather than down.
Okay. So